Good morning, traders. A very, very happy Friday. My name's Aaron Hill, and welcome to the next issue of Technical Talk. What a week it has been so far, and it's far from over yet. So here's a quick rundown of where we are right now, and then we'll punch things over to the charts. So here in sunny old England, the BOE yesterday kicked rates higher to 0.5%. The announcement comes as a result of the latest CPI figures, rising to 5.4% in the 12 months to December 2021, up from 5.1% to November. The central bank also cautioned inflation is set to climb above 7% in spring. Now, the recent hike was the first back-to-back rise since 2004, as rates also increased in December from 0.1% to 0.25%. Also of interest, of course, is the BOE Monetary Policy Committee's members voted 5-4 in favor of raising rates from 0.25% to 0.25% to 0.5%, with the minority wanting a larger half-point increase. In addition to the BOE, the ECB took some of the spotlights. Although the central bank left policy unchanged, President Lagarde delivered surprisingly hawkish comments, stating that inflation risks are now tilted to the upside and it's no longer sensible to exclude a rate move in 2022, and also that bond buying could end in the third quarter. As you would expect, both the pound and euro ended Thursday on the front foot, with the former taking most of the glory, up 1.2%. Next up today, of course, we have the US employment situation report, or payrolls release, scheduled for 8:30 a.m. EST and or 1:30 p.m. GMT. Now, 150,000 non-farm payrolls are to be added to the US economy, according to Bloomberg's current median estimate. However, the forecast does range between a 250,000 advance and a 400,000 decline, with an average currently around 89,000 payrolls. As for the unemployment rate, unemployment dropped to 3.9% in December 2021 from November's 4.2% print, elbowing the value to within touching distance of pre-pandemic levels of 3.5%, and this was in February of 2020. So January's release is set to remain unchanged at 3.9%, according to Bloomberg's median estimate, with a forecast range between 4.2%, a 4.2% increase, and a 3.7% decline. So over in Tokyo, overnight, Tokyo's close witnessed Japan's Nikkei 225 jump 0.7%. South Korea's Kospi penciled in a healthy 1.5% advance, and in Australia, the ASX 200 was up 0.6%. Now, in Europe right now, major European cash equity markets are somewhat mixed at the moment. The FTSE 100 is up 0.6%. The DAX 40 over in Germany is up 0.6%, and France's CAC 40 is currently unchanged. Euro Stoxx 50 is down 0.2%. Though do bear in mind, US equity index futures are currently higher across the board. Now, in terms of where we are in the currency market in early London hours, euro dollar currently trades at 14.58 and is up by 0.2%. Aussie dollar a touch above the 71 figure at 71.09, though is down by 0.4%. Dollar yen, up by a point, eking out a modest gain at the moment, up by 0.1%, and the pound dollar is down 0.1%. So the pound dollar is currently trading at 35.77. Now, moving things over to the charts today, we're going to be first looking at the pound dollar. So the daily time frame, as you can see here, is currently interacting with the daily resistance at 36.02, and this is a level that entered the picture following 3 consecutive bullish sessions, formed ahead of support at 33.55. Technicians will also note we have the 200-day simple moving average circling above the resistance area at a resistance level at 37.08. So noting this resistance, coupled with H4 price testing the underside of resistance at 36.22, 36.46, and H1 whipsawing. Excuse me, guys. This is the H4 time frame here, and this is the H1 time frame. So couple the daily time frame with the H4 structure, couple this with H1 whipsawing above the 136 handle on the H1. And which likely tripped a number of buy stops, both from traders attempting to fade the round number and also those attempting to trade any breakout. This has clearly fueled a bullish response, as alluded to in Friday's technical briefing. As you can see, we are now beneath the trend line, the local trend line support taken from around the low of 144, and this indicates we could see possible moves towards support at 35.49. 35.23 and also the 135 figure. And do note the 135 figure also aligns closely with the Quasimodo resistance turn support on the H4 time frame at 34.98. So next up is the euro dollar. Now, really quickly, this one is an interesting market right now. So currently we are close by the weekly resistance area. This is the weekly time frame here at 1473, 1583. Now, in addition to this, we have the 1483 January peak on the daily time frame to be aware of, and also on the H4 time frame, we are nearing the 61.8%, this green line here, 61.8% Fibonacci retracement ratio at 1475. And between the 1473 area, the 1483 level, and the 1475 region, we do have it combines to offer a reasonably tight area of resistance to be aware of going into today's session. Trend studies also echo a bearish sentiment. We can clearly see this on the weekly time frame since topping at 23.50 at the beginning of January, and this was January of 2021. And this is also reinforced by the monthly time frame. As you can see, we have been in a clear downtrend since mid 2008. Okay, clicking over to the dollar yen. Now, the dollar yen is a reminder of why multi-time frame analysis is incredibly important. So, despite the technical confluence around the 115 figure on the H1 time frame here, as you can see, we had a trendline support term resistance. We also had another trendline resistance alongside a 61.8% Fibonacci retracement at 115.11. And this formed a nice area of confluence, which you can see some sellers did try to come in from. But the higher time frame suggested a cautionary approach, as we highlighted in the in Friday's technical briefing. So the underlying trend is clearly to the upside on the higher time frames, and this is clearly against our H1 level. And this has been advancing since the beginning of 2021. The weekly time frame also exhibits some scope to approach the 1.272%. This is the weekly time frame here, guys. 1.272% Fibonacci projection at 116.09. Excuse me. The double top pattern on this is the daily time frame. The double top pattern coming around the 113.50 area had its neckline broken at 115.06. And also suggests a move to at least Quasimodo resistance at 116.33 on the daily time frame. Do bear in mind the Quasimodo resistance is situated a touch above the weekly time frames resistance. Now, in addition to weekly and daily time frames, the H4 time frame suggests a possible AB equals CD formation which terminates directly at the daily Quasimodo resistance at 116.33. As you can see, we have since cracked above the 115 handle, but we are reacting somewhat off of this trend line. But nevertheless, this does show how important multi-time frame analysis is, and it could have avoided a potential loss where it popped above the round number. Finally, just a quick note on the dollar index as we head towards the US non-farm payrolls. So now the US dollar index is a geometric weighted average of the dollar's value against 6 major currencies, with the euro controlling the major portion of the share. It's around 57.8%, I believe. So anyway, as you can see, we have aggressively sold off from the Quasimodo resistance at 97.45 over the week, and yesterday popped below the ascending channel support. Now this indicates we could be looking at further selling towards support at 94.65. Now do bear in mind, guys, this is the daily time frame. In addition to this, we are also testing a support area between 40 and 50 on the RSI, the relative strength index. Do bear in mind that this is common within trending environments to see the 40 and 50 offer somewhat temporary oversold oversold region. So we could see a bounce higher from this area, which could actually align with this support at 94.65. Okay, that's it from us this morning. As usual, any questions or comments, please feel free to email the research team at marketanalyst@fpmarkets.com, or alternatively, the support desk at support@fpmarkets.com. Thanks for joining. Have a fantastic Friday and an even better weekend, and I will be back bright and early on Monday morning. Thank you so much.